From Vietnamese workers coming to China to Chinese workers heading south to make a living, history's reversal has slapped Xi Jinping in the face. Here is Jersey's news commentary channel. In recent years, the China-Vietnam border has been witnessing a deeply ironic historical reversal. Around 2010, many people living in China's border regions knew well that large numbers of Vietnamese crossed the border into China to work, run small businesses, cut sugarcane, and enter factories. At that time, China was still a place of aspiration for workers from neighboring countries. Back then, in the eyes of many Chinese people, Vietnam was still merely a neighboring country with lower wages, weaker industry, and slower development. Public reports showed that in places such as Dongxing and Pingxiang in Guangxi, tens of thousands of Vietnamese laborers indeed entered China. During the sugarcane harvest season, Chongzuo in Guangxi even relied heavily on Vietnamese workers to fill persistent labor shortages. But who could have imagined that in little more than a decade, the wind would reverse so dramatically? Today's Vietnam is no longer just a low-cost basin in the eyes of Chinese entrepreneurs. It has become one of East Asia's most important destinations for global manufacturing relocation. Official Vietnamese data show that realized foreign direct investment reached $25.35 billion in 2024, a record high, with manufacturing and processing industries absorbing the largest share. The World Bank expects Vietnam's economy to grow by around 6.8% in 2025, and still maintain about 6.5% in 2026. Look at what is happening. Apple has increased its supply chain commitments in Vietnam. Manufacturers such as Foxconn and Luxshare continue expanding production. Chinese firms are also concentrating more investment in Vietnam across electronics, electrical appliances, textiles, furniture, machinery, and new energy manufacturing. What does this mean? It means Vietnam is continuously absorbing orders, factories, jobs, and supply chain links that might otherwise have remained in China. People once called China the world's factory. But today, the practical choice of more and more companies is to move part of their capacity to Vietnam, reroute part of their exports through Vietnam, and place new investment there. The reasons are actually simple: labor costs, favorable geopolitical trade arrangements, easier exports to the United States, supply chain risk diversification, and foreign investors' hedging needs. Combined, these factors have made Vietnam an increasingly attractive destination. Even Chinese official research institutions have had to admit that the pandemic shock, rising costs, China-US tensions, and ASEAN's recovery in work and production have jointly pushed part of the industrial chain toward Vietnam and other countries. And China? China's problem today is no longer merely sluggish growth. It is that society's expectations for the future are collapsing. Some institutional studies suggest that from 2015 to 2025, the number of China's flexibly employed workers rose from 120 million to 280 million. This category alone now accounts for roughly 38% of the country's 730 million urban workers. It must be pointed out that under the official definition, anyone working at least 1 hour per week can be counted as flexibly employed. In reality, this often amounts to disguised unemployment. In addition, in recent years there have been roughly 30 million returned migrant workers, around 70 million unemployed university graduates, plus large numbers of workers laid off from state institutions and state-owned enterprises. Altogether, this totals roughly 50% of China's 730 million urban workforce. Precisely because of this, in recent years an increasingly striking new signal has emerged along the China-Vietnam border. Large numbers of Chinese people have begun to see Vietnam as a new direction for job hunting, survival, small business, and even illegal labor migration. Border crossings have become overcrowded with those attempting to head into Vietnam, in some places even spiraling beyond control. Public information shows that both China and Vietnam have strengthened crackdowns on illegal border crossings and unlawful labor in recent years. China's National Immigration Administration has also reported cases involving organized illegal overseas labor by Chinese citizens. This shows that, at least along the border frontlines and in underground labor chains, Chinese people seeking work opportunities abroad is far from an isolated phenomenon. The most painful part of this story is not simply that some people are going to Vietnam for work. It is the historical meaning behind it. A little more than a decade ago, Vietnamese people saw China as the land of greater opportunity. Today, many industries and workers increasingly see Vietnam as the more hopeful destination. A country once regarded by many Chinese as a backward neighbor is now pulling away factories, orders, new investment, and even the gaze of Chinese laborers. This reversal is undoubtedly the loudest slap in the face of the so-called Xi Jinping new era. Why has this happened? Because although both China and Vietnam still wear the label of socialism, they are no longer walking the same road. Vietnam, broadly speaking, has continued expanding outward openness, striving to integrate itself into global manufacturing, trade, and capital networks, while maintaining a pragmatic and proactive alignment with the US, Europe, Japan, and South Korea. Vietnam is not without problems. But at least it understands that development depends on markets, private sector vitality, external investment, and creating an environment where businesses can make money and investors feel safe placing orders. By contrast, although China keeps shouting about high-quality opening up, in reality it has elevated national security above all else, drifting away from Deng Xiaoping's reform and opening trajectory and moving institutionally closer to the Mao era. Look at the pattern: the state advances while the private sector retreats, platform crackdowns, the destruction of private tutoring, real estate implosions, local fiscal exhaustion, collapsing private sector confidence, and worsening foreign investor expectations. The result is obvious: capital withdraws, factories relocate, jobs shrink, and young people search desperately for a bowl of rice in an atmosphere of despair. So today's China-Vietnam divergence is not merely a simple wage comparison, nor merely an industrial cycle. It is the result of two sharply diverging political-economic paths. One side is realistically continuing to connect with the world. The other sings slogans of openness while erecting institutional barriers layer upon layer. One side is trying to preserve room for businesses. The other treats enterprises as subordinate objects that can be manipulated, restructured, mixed reformed, or harvested at any time. In such an institutional environment, of course capital runs, orders leave, and people panic and seek places where they can survive. This is precisely the East Asian sequel to Why Nations Fail by Darren Acemoglu and James A. Robinson. Just because two countries both call themselves socialist does not mean they will produce the same outcome. Nor does being led by communist parties guarantee the same development logic. What truly determines a nation's rise or decline is not slogans, but whether its institutions encourage creation or punish creation, whether they respect markets or fear markets, whether they allow society to grow organically or insist on political power gripping every throat. From Vietnamese workers heading north to China to some Chinese workers heading south to Vietnam for survival, this reversal did not happen naturally, nor is it a historical accident. It was forced step by policy choices. It was manufactured little by Xi Jinping's reverse course. If a country eventually finds that even a once poorer neighboring nation now looks more like a land of opportunity, if it drives away its own businesses and pushes its own workers to border crossings in search of escape, if its young people face not upward mobility but layoffs, wage cuts, involution, and hopelessness, then that country will inevitably move toward failure. This is the unavoidable collapse produced by a fundamental error in political direction. What is unfolding today along the China-Vietnam border, the scenes of overwhelmed crossings and bursting checkpoints, is nothing less than the direction of the times, the tide of history, and the movement of popular will.